In this video, we'll talk about what the Federal Reserve did and its implications on the stock market. As you know, the stock market is reeling, and AI stocks are right at the center of the storm. Nvidia, Microsoft, and Meta have seen billions wiped from their valuations, and investors are scrambling to understand what's next. The reason? A double hit. First, the Federal Reserve's latest decision on interest rates, and second, a game-changing AI breakthrough that's shaking up the industry. It all started when the Federal Reserve announced that interest rates would remain unchanged at 4.25% to 4.5%. This move caught many investors off guard. While some expected rate cuts, Fed officials signaled that inflation remains a concern, meaning borrowing costs will likely stay high for the foreseeable future. That's bad news for tech companies, especially those in AI, which rely heavily on capital to fund their innovation. The market didn't react well. The S&P 500 and Nasdaq both dipped, with tech stocks bearing the brunt of the losses. Investors are wary. Higher interest rates mean slower growth for high-risk, high-reward industries like AI. And when big tech struggles, the entire market feels it. But that wasn't the only shock to hit the market. On the same day, Chinese AI startup DeepSeek made headlines by unveiling a powerful AI model that rivals the capabilities of leading Western models, but at a fraction of the cost. This sent Nvidia's stock tumbling, as investors started questioning whether companies really need Nvidia's expensive GPUs anymore. The result? Billions in market cap wiped out almost overnight. The ripple effect was immediate. Microsoft and Meta, both of which have been pouring billions into AI, also saw their stocks take a hit. Investors started questioning whether these companies could keep their competitive edge or if DeepSeek was about to change the entire AI landscape. Wall Street was divided. Some analysts saw this as a temporary shakeup, while others believed it was the start of a major shift in AI investing. But the biggest loser? Nvidia, the chip giant, which has been at the heart of the AI revolution, saw its stock plunge nearly 17%. That's a massive one-day drop, wiping out close to $600 billion in market value. It's one of the worst losses in the history of the stock market for a single company. Investors panicked, fearing that Nvidia's high-end GPUs might not be as essential to the future of AI as they once thought. Hedge funds and institutional investors started adjusting their AI portfolios. Some took the sell-off as an opportunity to buy tech stocks at a discount, while others saw it as the beginning of an AI correction. A few analysts even started drawing comparisons to the dot-com bubble, warning that AI stocks might be in for a rough ride. So where does AI go from here? Investors are now reconsidering the fundamental costs of AI infrastructure. With DeepSeek proving that high-quality AI can be built with fewer resources, it raises a critical question. Does Nvidia's dominance have an expiration date? Or is this an overreaction that will soon correct itself? While the market scrambles to make sense of this shift, the Federal Reserve's decision is also playing a huge role in shaping what happens next. High interest rates could slow AI innovation, making it harder for startups to secure funding. But at the same time, big players like Microsoft and Nvidia still have the resources to power through this turbulence. This has turned into a battle of perspectives. Is AI's rapid growth about to hit a roadblock? Or is this just a temporary shakeup before the next wave of AI innovation? Investors are watching closely, and the stakes couldn't be higher. As the dust settles from the initial market reaction, the question on everyone's mind is, what happens next? Will AI stocks recover? Or is this just the beginning of a broader correction? Investors and analysts are divided. One of the biggest concerns now is how this affects AI startups. Rising interest rates make borrowing more expensive, and many smaller AI firms rely on venture capital funding to stay afloat. If funding dries up, it could slow down AI innovation, allowing only the biggest players like Microsoft and Nvidia to dominate. But Nvidia's troubles aren't over yet. DeepSeek's AI model has raised serious questions about the need for Nvidia's expensive GPUs. If AI developers find ways to train and run models more efficiently, they may start looking for cheaper alternatives. This could completely change Nvidia's future growth trajectory. Some companies are trying to reassure investors. Mark Zuckerberg has stated that DeepSeek's rise actually confirms that Meta's AI strategy is on the right track. He believes AI's accessibility will grow and create even more opportunities in the space. But not everyone is convinced. Some experts worry that increased competition will squeeze profits for the biggest AI companies. Meanwhile, hedge funds are making moves. Some believe this is an AI correction, not a crash. They predict that while AI stocks may struggle in the short term, long-term demand for AI technology remains strong. This optimism is keeping some investors in the game. However, the Federal Reserve isn't making things easy. Chair Powell's recent comments indicate that interest rates won't be cut anytime soon. This means companies investing heavily in AI won't get relief from lower borrowing costs. It's a tough environment for growth stocks. Goldman Sachs, on the other hand, sees opportunity. Their analysts suggest that this AI dip could actually be a great buying moment for investors with a long-term perspective. They argue that AI innovation isn't slowing down, only investor sentiment is shifting. But Nvidia isn't waiting around. After the initial panic, its stock has started to recover, bouncing back by 8.8% as investors rethink whether the sell-off was an overreaction. Some traders now believe that AI stocks are still a solid long-term bet, despite short-term volatility. So now, investors are left with a choice. Do they buy AI stocks at a discount? Or is this the beginning of a longer downward trend? One thing's for sure, AI isn't going away, but the game is changing fast. The next few weeks will be critical in determining whether this AI panic was just a temporary dip or the start of a larger shift. While investors remain uncertain about AI stocks, one question looms large. Will DeepSeek's breakthrough change the future of AI investments? The company has already disrupted the market, but is this just the beginning? DeepSeek's cost-efficient AI model is forcing investors to rethink the economics of AI development. For years, it was assumed that AI required massive infrastructure, expensive GPUs, and endless data processing power. But if a startup can challenge Nvidia, OpenAI, and Google without those resources, what does that mean for the AI industry's future? Some analysts believe this could actually be a positive shift. If AI becomes more affordable and accessible, smaller companies may finally have a chance to compete. This could break the dominance of a few major tech players and open the door for a wave of new AI innovations. On the other hand, there's concern that AI's widespread accessibility could lead to diminishing profit margins for companies like Nvidia, Microsoft, and Google. The more AI models become open source, the less incentive there is for corporations to invest billions into exclusive AI research. Meanwhile, investors are also keeping an eye on another unexpected impact: mortgage rates. AI stock movements have a ripple effect across financial markets, and some experts believe that the sell-off in AI stocks could lower bond yields, ultimately reducing mortgage rates in the coming months. While AI stocks struggle to find direction, the broader financial market is also feeling the heat. The Federal Reserve's decision isn't just affecting tech, it's triggering fears about potential instability in global markets. Investors are now more cautious than ever about the tech sector's volatility. Despite the chaos, there are some strategic plays investors are considering. Some believe that diversifying AI investments across multiple sectors, such as healthcare, cybersecurity, and autonomous driving, could provide stability in a volatile market. But even with all this uncertainty, some investors remain confident that AI is still the future. Big tech companies are unlikely to slow down their AI spending, even if their stocks experience temporary pullbacks. If anything, this market shakeup could force companies to focus on building more efficient AI systems, leading to faster breakthroughs in the long run. The real question is AI's future in trouble, or are we on the verge of a new era of growth? One thing is certain, AI stocks are no longer just about Nvidia and Microsoft. The game is changing, and investors are watching every move closely. AI stocks have been on a wild ride, and after weeks of uncertainty, investors are looking for clarity. Will AI stocks stabilize, or are we heading into an extended period of volatility? As Nvidia, Microsoft, and other AI giants recover from their initial losses, the question remains, what's next for AI investments? Some analysts believe that this is a reset rather than a collapse. They argue that AI is still in its early stages, and these setbacks are a natural part of the market's evolution. One of the biggest factors shaping the future of AI stocks is the Federal Reserve's ongoing stance on interest rates. As long as borrowing remains expensive, growth-oriented companies will face challenges in expanding their AI capabilities. However, if inflation cools and the Fed starts cutting rates later this year, AI stocks could see another major rally. As investors navigate the uncertainty, there are a few key takeaways. First, AI stocks are likely to remain volatile in the short term. Second, competition in the AI space is intensifying, which could create both risks and opportunities. And third, the Federal Reserve's policies will play a crucial role in determining whether AI stocks continue to rise or face further setbacks. But for now, all eyes are on the next market moves. Will AI stocks continue their recovery, or is another major shift on the horizon? Investors are watching closely, and the next few months could shape the future of AI investing for years to come.